Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so we talked yesterday, both 38.10 and new highs should print this week. Well, they went down and they took care of the 38.10 part. They took it all the way down to 37.88. And then they promptly tripped over their own 2 feet, face planted, and gave it all back. They haven't given the whole thing back yet, but they're working on it. So on the hourly chart, so what this looks like on a daily chart is just a sloppy test of the 9-day that holds. You go on the hourly chart and you see they had their opportunity here to take out the 9-day, to take out the new weekly pivot at 38.10, and try to at least close below there and get started on the rule that we've been talking about for months now about how do you figure out when we're actually going to go down. And for those of you that are new, that is, pick 2 lines on the chart here. Pick 2 cards, any 2 cards. Close below, and then stay below for an entire Globex. If the bears can accomplish that, then they are, in my opinion, ready to, pull back for a period of days. It goes down as far as it goes down, and ultimately it's a buy. But at least that point, it's not going to be this kind of dip and fail. So it was a great short. It was a great long. It was a good trading day yesterday. Lots of vol. It started out a little bit sleepy, and then all of a sudden, down it went. So as we head into today, they took it down a little bit in Globex. We actually shorted it from the 47 area and took our profits last night into this morning. And they've taken it right back up to this 52-53 area. So 52-53 continues to be a problem. It's a problem here, 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 all the way through. It's been a problem since last Thursday. You got your all-time high. You had your lower high, 57.5, and then all these looks at 54, 53, 53. Comes down, goes back, goes down, comes back. But they've got to convert this area to support. If they convert resistance to support, that's the springboard to climb up and out and try to go do, certainly take out the 59.75, go to work on 68, 77, things like that. I mean, they're up there to be had, and you can't go, oh, well, we're so overbought, we're so parabolic. No, we're not. No, we're not. We've been compressing now for 3 days. They took it down as deep as 37.88. There's nothing overbought about this, at least in the short term. So they certainly, they absolutely can do it if they just put one foot in front of the other and stop getting all, stopped in up and around 52, 53. The bears have to desperately keep defending this area, and they have to stop coming back here. They need to hold it. If they do, then the whole thing looks like a big, looks like a big ceiling between 53 and 60, and that that gets you back to the daily mid band down in that 37.82 area, which they had a chance to be down there now, but it just demonstrates how big this tape is. When we go down, it's okay to have the big down. That's the easy part. The hard part is what happens after they start to bounce it. So yesterday when they bounced it and got it back around 38.10, they tried to take it back down one more time and do that lower low. That's the move the bears really haven't been able to pull off on a consistent basis for the last, 10 years. That's the one that scares the weak buyers and the reflexive dip buyers out of the pool and gets you that deeper move. When the bears are able to execute that, then they'll be ready for bigger things. Until then, you're going to get a lot of these full round trip recoveries. We closed yesterday above 52.53, full round trip. They dumped it from where? From 52. We close at 47, the high 51.5. So they take it back. So today you've got hourly mid-band 38.75, volume weighted average price 40, about 40 quarter. Proprietary moving averages at 47. I would not be surprised with a little bit of give back off the open. And when I say a little bit of give back, they're really going to have to hold this 47, 48 area, and then try to get up over the top of it. What do the bears want to do? They want to get back below 38 as quickly as they can, and then they want to stay there. They need to start to live more below the hourly mid-band than above. That's the gateway to them at least creating a consistent two-sided market. And, there's nothing to complain about from a trader volatility perspective. We've had plenty of ups and downs. It's been a really nice trader market the last few days. We'll see if that continues today. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come trade this stuff with us in the room. If you're serious about learning it, if you're serious about trading it, if you want to be trading for, if you want to trade, if you're looking for consistency, risk management, not running around with your hair on fire, and just, consistently doing what you need to do each day to turn this into a consistent thing for you, come check us out. Come see us for 2 weeks, free trial, and see if you like it. We'd love to meet you. It's a great group of people. Take care. Trade them well. See you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.